This is Talking Capital Markets, where ideas drive the markets. We move past the headlines and into the heart of the deal, breaking down IPOs, M&A, governance, and the strategies driving real growth in today's capital landscape. No noise, no hype, just conviction, execution, capital in motion. If you're building companies, raising capital, advising boards, or deploying investment, you're not just listening, you're in the room. And now, here are your hosts, Mike Blankenship and Brian Jew.
All right. Welcome, everyone, to the inaugural episode of Talking Capital Markets with Mike and Brian. I'm Brian Jew, and with me, as always, is my co-host, Mike Blankenship. Mike, we finally launched this thing.
We did. Thanks, Brian. Yeah, it's fun to be part of it. And I think it's important today where we see the market and, coming into next year where I think we're going to see a lot of good developments in the capital markets. So it's going to be fun to speak with you about that and see where things go and maybe put our our guesses on where things will be and hopefully get those done right.
Amen. So this show, what we're going to try to do, folks, is we're building this show for anyone who lives and breathes in the deals, the regulations, and the trends that actually move capital, the capital markets. Those are raising capital, buying and selling businesses, doing an IPO, a SPAC, all that great stuff. We look to talk about the intersection of business and finance and law. And we're going to do our best to try to talk to you all about it straight and try not to hit all the jargon and the buzzwords, because sometimes for those of us in the capital markets, we talk like that because we know it, but we often don't realize that sometimes people don't understand what we're talking about. So we're going to do our best there. Mike, if you want to give us a little bit of background about yourself, that'd be great.
Sure, Brian. Yeah. So Mike Blankenship, co-chair of the Capital Markets Group for Winston Strawn. I'm based in Houston, Texas, managing partner of the office here. We work on all different types of public company transactions, from your SPAC, de-SPACs, to your traditional IPOs, as well as your direct listings and everything in between once they are public, whether it's a private deal or a follow-on, a public raise. So seeing a lot of activity in the market from all over the world, from clients in Asia, Europe, certainly here in the United States and various states throughout. So, we keep it pretty active and have a great team kind of always keeping the pulse of where the market is. So it's great to be here with you, Brian. So Brian, tell us a little about yourself.
Well, I've got something like 35 plus years involved in the capital markets. And I think my background is unique in that I've touched the deal process at every different facet and angle that you can think of. And what I mean by that is from a startup, back in the day when a startup was on a napkin, right? From a company at that stage of its business life cycle to emerging growth, to raising capital, to potentially being an IPO, to buying and selling, other businesses, and all the way to a public company, because there's a big difference in managing a publicly traded company than a privately held company, as you know, Mike, all the way to, that where the business goes. Is it a final exit where everyone steps out, or unfortunately, sometimes businesses have to go through the bankruptcy process. I've seen it all, but the difference is I've seen it as the operator / founder / entrepreneur. I know what it's like to be in the shoes of that business that's looking to raise the capital, looking to sell, looking to buy, right? I also understand it from the aspect of the investor, the check writer, or, AUM, capital that we're responsible for. So I know what it's like from that point of view, and to see what the transaction looks like and what needs to be done there. And the third facet, from the advisor, intermediary, broker, whatever you want to call it, that consultant, that role in the middle where you're trying to put the parties together and trying to get everybody to agree, knowing what it's like from that aspect as well. So I think that has given me a perspective and a strength that is a little bit different than everyone else. And along that way, been able to build a fantastic network, which led us here, Mike, led us to, being able to, build the friendship and working partnership together, and something that I'm very, very excited about, because I think we're going to do a lot of great stuff moving forward together.
Yeah, I certainly agree. With your background, I mean, maybe you could talk about, when markets are open, it's really important for a company to be prepared for that. But where do you see that company sometimes, unfortunately, these deals die? Like, where do you see in your experience or some of the mistakes that folks have made trying to get into the public markets?
You know, I think there's two angles that people go the wrong way. The first is that paralysis, that's caused by too much analysis paralysis, right? However you want to term it. It's, trying to get everything right, trying to be perfect, trying to time the markets correctly. As we see, the world changes. It's always changed fast. There's always economic factors. There's things that happen. And if you pay too much attention to it, I'm not saying that you don't pay attention to it, because you have to, but if you worry about that too much, it will cause that concern that things don't happen fast enough, you don't move fast enough, right? Then on the flip side, you see people that run too fast, and that they try to go too quickly without dotting the I's and crossing the T's and finding the right people involved. But I think the biggest one that I've seen over the years is, and this is something that, I'm really excited about, what we're doing, and trying to inform everybody and be a source that to help people out, is over the years, Mike, we've talked about transactions. Sometimes we'll lay out to a company everything you're supposed to do, and then they say, well, how much does it cost? Right? Well, it's like, I'm not doing it for free. And then when we talk about that part, they immediately think, oh wow, it's too expensive. Or they say, maybe we should go talk to somebody else about it and solicit other opinions. And I'm not talking about talking to other experts, because that's one thing, but talking to people that might just be an attorney, a transactional attorney, or sometimes even a family law attorney, but not talking to a corporate securities law attorney such as yourself. And they hear, they get bad advice, or think that they can do things on their own without as much cost, or there's all kinds of consultants and advisors out there that'll say anything that they want to a client, potential client, not talk about, oh yeah, don't worry about the fees, or oh yeah, we'll do that for free, but it's all hidden. No one's doing anything for free. So as a result, they go down the wrong road. And I can't tell you how many times that I've seen someone take a blueprint that we gave them, run with it, fail, and come back to us and say, hey, can you help now? Things like that. And I see this so often, and it's so troubling. And even when you see, someone that might say they're an SEC attorney, they don't know what they're talking about, or saying that they've been there, done that, and they haven't. It's tough. I hate to see companies go down that road. Not even It's not even about losing the business. It's just about seeing a great idea go nowhere. It's, I'm sure you've seen the same.
Yeah, I mean, look, in the capital markets, missteps are far more expensive than fees. Like you see that happen all the time, and you're going to pay either way, and so it's important to not focus on that. The focus is the process, and to your point earlier, look, the doing an IPO requires you to wear two hats: one running the business, and the other one looking to go public. And you may have certain pressures to do that, whether it's employees, owners to go public, which is fine. But you need to be ready and have that process. It's not an event. It's not like a one-time event. Now, ringing the bell is great. We've done it multiple times in NYSE and NASDAQ, and being part of that is historic and very fun. But, you have to really understand that the process takes time and that you have to get it done right. Otherwise, those time and that cost will be there. And it really is, a myth that it's so easy to just go from point A to point B. You really have to have the right advisors, and think about it early and get it done. Don't start late. Think about it. Like, if your goal is early on to go into the capital markets and next year, find the trends, look for where things are. If you're an industry that's one that's going to be hot and we're going to see take off next year, certainly look at that as a market window and be ready for it, because those come and go all the time. And, we've often see that happen where companies are geared up to go, but sometimes they're just a little off. Maybe their financials aren't ready. Maybe some other disclosures not ready. I think we live now with an SEC group that is a little bit more capital markets friendly, certainly looking to find ways to open the capital markets, whether it be something interesting as tokenization of the securities, or going just allowing more companies to be out there, because we've seen back in 2000 we've seen 9,000 or so public companies, and now we're down to 4,000 or so that's a cut in half. It doesn't democratize securities for others in the market to be owners of these businesses. They're really kept at the high level. And so if you're a small cap, micro cap, or some company that's looking to go public, you have to make sure you have the right strategy in place, and you have to make sure you have a certain optionality around it, understanding that time is important. And so you really need to make sure you keep that going so you don't kill momentum and you have it built up. And so I really think, as we're looking into the coming years, I think we're going to see a lot more. I think, valuation's important as you're looking at your company. Doing all those things and making sure you protect any sort of downside issues is also critical. I mean, Brian, what is it that you see going into next year, at least from a capital markets perspective, on being prepared, on seeing sort of what are those industries as well that you're thinking that are going to really